Everybody, it's Carrie from KDS Insurance Services. How are we doing this beautiful Friday? It's the weekend, it's here, and I hope you have a wonderful weekend this week. Wanted to talk to you today. This is my final video for the week, and I always like to come in and talk about things that are pertinent that happen throughout the week that I can share with you to help you become a better educated consumer and understand this crazy complex thing called insurance. So the thing I want to talk to you today about is a personal liability umbrella and why it is so very important for you if you have substantial assets. And what I mean by substantial assets is if you are in a car accident and you maim or unfortunately kill somebody, we want to make sure that if you have liquid assets of any quantity over $500,000, well, maybe even a little less than that, maybe $300,000, that we're protecting those assets. And a lot of people get confused by what all this is and why it's so important. Well, let me give you a scenario, and that will help you kind of understand why this is so important. So the first scenario we're going to talk about is a car accident. If you have a car accident and you kill somebody, maim somebody, injure somebody, and they have pain and suffering medical bills, and you damage their property, in the state of Texas, you are required to carry liability insurance. The reason for that is the state wants to make sure that if you damage somebody else's person and or their property, that you can pay for their personal medical expenses, their pain and suffering, and that you can either repair or replace their property, their car, or if you run into a house or a fence or whatever the property may be. So the state requires that you carry minimum limits, and those minimum limits are 30, 60, 25. What that translates to is $30,000 per person, $60,000 for everybody in the vehicle, and then the last number is property damage. So if you carry state minimums of 30, 60, 25, your policy will pay if you hit me and you damage me and I am hurt, your policy will pay $30,000 to me. If I have other people in the car, the maximum that your policy will pay is $60,000 for everybody in my car. Okay? So if I have 4 people in my car and we all have severe injuries, your policy is only going to pay $60,000 worth of medical expenses and pain and suffering. So that's not a lot of money in our world. Okay? So let's use the worst case scenario. You kill somebody. And let's say it's really bad and you kill all 4 people in my car. Are the attorneys and the judge, if you are found at fault and you are found liable and you are sued, are they going to accept all of $60,000 for 4 lives? No, they're not. They're going to sue you, and they're going to sue you for every single tangible asset that you have. That includes equity in your home. Even in the state of Texas, if your house is homesteaded, your house can still be liened by a judgment if you are found liable for injuries and or whatever happens afterward, death, maiming, whatever it may be. So that's the state minimum, 30, 60, 25. If you have assets, your policy limits need to be much higher than that. They need to be $200,000, $500,000, and $250,000. That means that your policy would then pay $250,000 to me for my medical bills and pain and suffering, $500,000 for everybody in my car, so all 4 people in my car, and then $250,000 in property damage for my property and or any other property that you damage in the accident. So you can see the difference between 30, 60, 25 and 250, 500, 250, right? It's way over here. It's a massive big difference. So a personal liability umbrella protects your auto policy. It covers your auto policy just like an umbrella would cover you. It is a policy that adds an additional layer over and above that middle number. So if that middle number is 60,000, a personal umbrella would cover that at $1,000,000 or more. The issue is, in order to get an umbrella, you have to carry higher limits. So you have to carry that 250, 500, either 100 or 250 or 500, whatever you decide you want. So your umbrella is going to make you carry that higher limit. So in your case, once you up those limits and then you put $1,000,000 umbrella over and above that, then your auto policy pays that first level at 500,000. Then your umbrella comes in and kicks in and pays an additional $1,000,000 or 2,000,000 or 3 or 5 or whatever your umbrella is decided that you need. So you have then $1,500,000 as your first line of defense in the event that you have an accident. Now, what's a tangible liquid asset? Anything that's not attached to a retirement vehicle, first of all, money, stocks and bonds, cars, boats, motorcycles, ATVs, cash in savings accounts, cash in life insurance. Anything that is not attached to a retirement product is a tangible liquid asset that can be attached in a lawsuit. That also includes equity you have in your home. So if you have a $500,000 home and you only owe $100,000 on that house, there's $400,000 of equity, that tangible liquid asset that could be attached in a lawsuit. So don't think just because your house has homesteading on it that it prevents your house from being liened. It does not. If someone is telling you that, they are telling you incorrectly. So that's the auto scenario. Your umbrella policy also covers any other underlying policies. So your auto, your home, a boat, a motorcycle, an ATV, a golf cart, a travel trailer, a fifth wheel, anything that's personally has insurance on it, your umbrella acts just like a cover for all of those policies. Okay, same principle. Okay, so you say, okay, Carrie, well, how can my home have a liability claim? Well, first and foremost, if you own a pool and you don't have $1,000,000 umbrella, you are at risk. Seriously. Somebody could come into your backyard. I don't care if it's fenced. I don't care if the pool's fenced. If you have a pool in your backyard, your liability exposure has just gone through the roof and you are at risk. So what happens in this case? Somebody comes into your backyard and they accidentally fall into your pool and drown. Are you responsible? You can be. And your homeowner's policy generally has anywhere from $100,000 in liability up to $500,000 in liability. So that's built into your homeowner's policy. It's the same principle. Your homeowner's policy pays first, whatever that liability number is. Then your umbrella would kick in and pick up or add an additional $1,000,000 or whatever the number is on your umbrella. You could also have something happen at your home that is not related to a pool. Something could happen, somebody could come over, you could have a workman on your property and they get injured and for some reason they come back and try to sue you, and if you are found at negligent or if you're found liable, then your homeowner's policy would pay for those damages, and they would pay up to the minimum limits on your policy. And if you have an umbrella, then it would kick up and pay any more over what is on your home. So this is so important. I can't stress this enough. If you've worked long and hard your whole career and you have assets and you don't carry at least $1,000,000 liability umbrella, then you are exposing your assets. Umbrella policies run about $300 a year for a married couple with a home and 2 cars, let's just say. If you have teenagers, the umbrella is going to be more. If you have multiple items, multiple cars, multiple boats, multiple rental properties, then your umbrella is going to cost you more money. But you have more assets, and so they're covering more things. It's different if you have a home and an auto, but if you have a home, an auto, a motorcycle, an ATV, a travel trailer, a boat, and all these other things, then sure, your liability umbrella should be more because it's covering more. It's a very, very, very important piece of your insurance planning, and there are a lot of agents that don't talk about it because they don't understand it. It should always be sold to somebody who has equity in their home. It just always should. And the liability limits on your auto policy should reflect the kind of asset level you have. If you're just starting out and you're in your 20s, you don't have a whole lot of assets, so you don't need to carry that higher number. But as you get older and you start to develop your assets, your underlying coverage amounts need to be increasing as your assets increase. I know it's complicated and it's a very undersold product that is so hugely important. And it is for you and your name, you and the other named insured, so for you and your spouse. Um, and it's just a very important piece of your puzzle. And if you don't understand it and if you don't think you have it, you should be talking to your agent so she or he can explain to you whether or not it's needed at your stage, and then how much it's going to cost you on a yearly basis. So I hope this has been informative for you here at my channel, which is Carrie Devlin Scroggins. We strive to give you as much information as we can about a whole wide range of things, insurance, just a whole lot of different things. This channel has a very large content, and we hope that it helps you to become a better educated consumer, to understand your products. If you don't, we are here to help you. So, of course, please, if you would leave a comment. If you don't mind, like and subscribe. We'd love to be able to notify you the next time that we post a video, which is generally 2 to 3 times a week. So make sure you hit that bell so you know the next time that we post a video. So I hope you have a wonderful weekend. Thank you very much for stopping by today. Have a great day. Stay safe and God bless. We'll see you soon.